Now, let's try to understand the 5-step model in revenue recognition. So, for recognizing the revenue, firstly, a contract needs to be identified. On the second step, we need to identify what are the performance obligations within that contract. Third, we need to identify what is the total transaction price. Fourth, we need to allocate that transaction price. And finally, we need to recognize the revenue in our books of accounts. Now, let's go through it for an example. Now, for example, a customer buys a subscription for Microsoft. Now, he has taken the subscription for Office software for 1 year license, and along with that, Microsoft has sold cloud storage for 1 year subscription. We can say it's around for 12 months. And after that, there is a one time training session which is being provided by Microsoft. So, initially the contract is existing between Microsoft and the customer, because that will happen through online modes or offline modes. After that, what are the performance obligations within that contract? So, basically Microsoft give the license for 12 months, they will give the cloud storage for 12 months, and they will give the training which is one time initially for initial period. Now, the next step is determining the total transaction price. Now, Microsoft is charging $1,000 for this entire bundle of service. Now, how and what are the different components within this services? You will say there are 3 different components. So, we need to allocate the transaction price between all of those components. So, let us suppose out of that $1,000, $600 belongs to office license, $300 belongs to storage, and $100 belongs to training. Now, what will happen? Simply, there is specifically no adjustments as well. So, these are allocated transaction price. Now, finally, we need to recognize the revenue. So, this license value which is for $600, this is given for 12 months period. So, effectively $50 will be recognized each month. Similarly, the cloud storage for which $300 is charged, that is also for 12 months. So, $25 per month will be recognized, but the training is being provided immediately and the services have been completed for that training. So, that $100 will be recognized immediately when the services are delivered. So, these are the important 5 steps within the revenue recognition model. Let me just reiterate and recite. Firstly, we need to see the contract, then we need to identify what are the performance obligation, then what is the transaction price, and then allocating the transaction price, and finally we need to recognize the revenue.